Today we traded my continuation model. As you can see it on the screen right now, we made a 2.3% return in only 2 minutes. We're going to discuss exactly how I managed to do so today. As you guys do know, on this channel we normally trade reversals. So it's going to combine volume imbalances and fair value gaps. So let's get into it. Starting off on the 4-hour time frame today, let's go and replay to my macro window. We were actually trading inside the 910, the 950 to the 1010 macro today. And I add 5 minutes either direction, so in front of the macro and at the end, because I found many of my trades are still valid 5 minutes before and 5 minutes after. So now we are inside the macro. The reason I'm looking for a continuation trade and it's bearish is because we have swept the 4-hour low. So how I trade on this channel, I go with the most recent sweep. We do understand that price has respected a bearish inversion fair value gap. We see we've came into this PD array, we've bounced off it multiple times and then displaced beneath, now making this a bearish PD array. Now, on top of this, we have also swept the previous 4-hour candle's high, validating my reason to be bearish, or so you may think. Now, the reason I can't really be bearish is because we've also swept the 4-hour low. But because the actual gap is still so far away, I used a little bit of discretion and dropping down to the 1-minute time frame, let's show you what I mean by that. Now, to take continuation trades, you're going to have to analyze bearish order flow. All this looks like is price not respecting any bullish fair value gaps and it's inversing them. At the same time, we're leaving multiple bearish fair value gaps open without even trading back into them. This is an extremely bearish signal, and if you do see this, it's great signs of bearish order flow. Typically, it's going to happen right around the New York Stock Exchange open. Now, before we just look to take entries, the final addition to my context was, for one, we normally don't just trade into a 4-hour gap and instantly reverse. Sometimes this does happen. It's called a V-shaped recovery. But what we normally do after hitting a 4-hour PD array or price delivery area, we like to push higher, take the short-term low, and then move in the intended direction. Now we've taken out some liquidity. So adding to my context, plus we got these equal lows if we look to the left, inside this bullish fair value gap. To me, it's just a super strong magnet of why I should look to sell. Now for the actual entry, this is a little bit different than what I show you on the channel. I did mention at the start of this video, it's going to combine volume imbalances and fair value gaps. Now normally, we're going to take an instant execution as soon as price hits the fair value gap, but we are going against my bias right now. We're below midnight. We're also below the 8:30. Technically, we got midnight acting as a resistance. Regardless, we're not going in line with my bias. So we need to wait for an additional confluence to really have certain we're not just going to continue higher. And for this, we're going to need price to pierce through into a bearish gap, have another candle that also sweeps the high. This is not a must. As long as we just hit the gap, that's fine. But we need another candle to open up in a volume imbalance. So a volume imbalance is exactly what you see here. We're going to analyze the previous candle's close, which is at this level, 21.21100. The open was actually lower, meaning there's a volume imbalance and it's bearish. Essentially, strong momentum is about to come into the market, as long as you're analyzing bearish order flow correctly, right? You're not going to just take any volume imbalance that you do see. We need context. We've hit a bearish gap. We've listed out hundreds of reasons why we should sell, at least down to this short-term low. So press and play, we see we open lower. I placed an instant execution. I got a fantastic fill, not normal for the fill to be like this. Stop loss placed at 20 points, maximum position, right above structure, little bit too volatile for my stop loss, but we're still above structure. We shouldn't really come back into this level. We see we haven't even touched the 50% of the CE. Looks fantastic. Let's press play. Targets just to swing low. Could have targeted the equal lows, but I didn't want to be too greedy. I got a fantastic fill And there you go, 2.3% smashed in only 2 minutes. Any questions on my continuation model, do let me know down below. It is a little bit more complex, but simple to actually practice. So any questions? Back tomorrow, guys. Peace.